Hello, welcome to Working Effectively in Finance. Um, uh, the, I'm going through this unit and explaining how many chapters is it and table of content. So as you can see, Working Effectively in Finance is going to be a 7 chapter. Each chapter is focused on different area and different responsibility within the finance team. So the first chapter is going to be the rule of finance functioning, how it is they are working, how they are working. Okay, so I'm going through the chapter and then I will upload it later on. So the rule of finance functioning is there is the outcome and the purpose of this chapter. So hopefully by completing of this chapter you have a understanding what is the role and responsibility of finance person is as a working in the finance team. Then demonstrate understanding how finance staff contribute to the success of the organizations. Then indicate and the role and informations the finance staff they hold and they can make a contribution to the success of the company. Then the overview of this chapter is going to be the role of the finance functioning, how finance staff can make a contribution, is make differences and it become a part of the success of the organizations. The role of the information as a finance staff they held and how can they take advantage of those informations to the stakeholder of organizations. Okay, so first of all we will focus on the role of the finance functions. What is their role and responsibility and accountability toward organizations? Okay, so it is essential to remember that all the work of the finance function in most of the organization and companies will have many common characteristics, and those characteristics is going to be a responsibility, accountability, and tolerating is a particular requirement to each organizations. So if we're looking at this table as an example of accountability and responsibility of the finance functionings, for examples, one of the responsibility is to prepare statutory accounts. What is the prepare statutory account? So this is involve preparing statement of the profit and loss. So you already knows what is the statement of the profit and loss and statement of the financial position. So you learn about these two statements from bookkeeping transactions. So and bookkeeping control from Margaret. Okay, so statement of the profit and loss, you already know about the income the company generated through the activity and the expenses. Okay, so the expenses could be the wages, depreciations, rent, rate, paying the utility bills. Then the second responsibility of the finance staff, reconcile information. So in order to ensure all information exist, for example, if you're paying an invoice, so you have to ensure the invoices is actually appearing from your bank statement. So because each month you will receiving your bank statement, so the bank statement must matching what you have spent and what you has generated as an income from either sales or providing a service. Okay, so the third one is accounting procedure and process. So it is obviously is maintaining and improving a procedure and allowing finance team to understand So the next one is analyzing a document and a report. This is one of the important, obviously, is responsibility of the finance staffs, to understand the business, to understanding the transaction, who is their supplier and who is their customer, and what are the level of the activity either in a month or a quarter. Okay, then looking at the banking, for example, cash and check. Okay, also it is important to understand how much cash is available, it is in hand, and how much is cash is available at the bank balance. So it is necessary to ensure you have a sufficient cash level to ensure you are able to meeting your payable. Then another responsibility is preparing invoice and credit note for the sales. So hopefully when we move into Sage, the last unit, so we will do a lot of preparation of how to raising invoices and how controlling credit for sales and for the purchase. So again, this is part of the bookkeeping transactions as a finance team, a finance officer. So you are responsible to accounting for sales revenue. Okay, yeah. And another responsibility, accounting for purchase, which is we have a revenue and purchase, so opposite to each other. So sales usually is dealing with the customer, and purchase is dealing with your supplier. Okay. So basically these are number of responsibility and accountability of the finance staff as a part of the finance team, and it is your responsibility and it is your duty to understand these functions. Okay. The second one is about the finance and management accounting. So from element of costing, so we little bit highlighted what is the finance team and what's the management accounting. Okay, so these are two different body as a part of the accounting of any organizations, so they are responsible for different tasks and responsibilities. For example, what is the management team's responsibility and what is the finance team responsibility? Okay, so these are two different body, and each of them they focus on different area. Okay, so okay, so if we looking at the financial accounting, the usually financial accounting is dealing with external matters. So they are dealing with the company's stakeholders, such as a government, such as suppliers, such as an investor, and obviously the financial accounting they are responsible for preparing two main statements, which is a statement of the profit and loss and statement of the financial position. So these two statements need to be prepared annually, and they focus on the historical data. Okay, so you already knows about the financial accounting. Management accounting is more dealing with the internal matter, such as preparing a monthly report, including budgeting. Okay, including budgeting and control and planning. So the management accounting are responsible for monthly report, including the preparing of budgeting, controlling and planning of organizations. So these are a financial accounting and management accounting. So you must have a good understanding what are the differences between these two teams. Okay, so financial accounting responsible for external matter. They are preparing financial statements, including statement of the profit and loss, and statement of the financial position, which is prepared on based on the annually. Management accounting is dealing with the internal. Management accounting is dealing with the internal issues, including preparing of the budgeting, also responsible for controlling organization and making strategic decision making, including an investment. Okay, so financial accounting and management accounting. So if we're looking at this table, actually it gives you a responsibility and accountability of each of them. Remember, this chapter is about the rule of finance functioning, about the accountability and responsibility of finance staff. Okay, so financial accounting required by law for the limited companies, and management accounting there is no requirement by law, as are not mandatory. As I explained, it is the primary financial accounting is responsible for external reporting purpose, management accounting for internal reporting such as a decision making purpose. So financial accounting calls in care to comply with the legal and professional obligation such as the auditing requirement for the companies. So every company, they must have auditing, and their statement of the profit and loss, statement of the financial position must be checked by auditing, and the auditing must give their report to actually justify that the report is fair and fair of view. Okay, fair of view, it is accurate. Okay, then cost of recording keeping needs to be justified. This is for the management accounting. For example, cost of preparing and maintaining information. Okay, so these are the information, obviously, so you can go through it and read it. So and getting some more information, because in the exam you have a question worth it about 8 marks relating to the financial accounting and management accounting, especially this unit working effectively in finance. You are more dealing what is the responsibility and accountability of these two teams. Okay, for example, another responsibility of the financial accounting, so they are focused on the historical financial informations in order to preparing statement of the profit and loss, statement of the financial position. So it is necessary to have past informations, historical information. For example, last year's revenue, how much was it, revenue in past 5 years. So these kind of informations allow finance team to preparing and to understanding, have a clear view the level of your revenue, whether increasing or decreasing in past 3 years. So if it is increasing, it must be a reason behind it. If it is decreasing, it must be a reason behind it, why is decreasing. So you have to work on the issue, what is causing your revenue is decreasing or declining. Okay. Also is historical information for the management accounting is it is needed in terms of preparing of budgeting. So every company, they must preparing a budgeting, whether the budget is monthly or annually. So you're preparing a budgeting or forecasting for your sales and for your expenses. Says, for example, you have a target to increasing your sales by 3% compared to last quarter, or you have a target to increasing your sales by 10% compared to last year. So this is we calling as a historical information, and the historical information is it would be necessary in order to preparing your budgeting for the future. So budget, the purpose of preparing a budgeting, it allow you uh, to focus on the right direction for the future. Okay, so the budgeting, it help you to concentrating on the right direction in the future. Okay, so budgeting is all about the future. Okay. Third one is from this chapter. So the third topic from chapter 1, the rule of finance functioning, is solvency. Solvency is about mm, is focus on the availability of cash. So as a finance team or finance officer, so you need to ensure that you have a sufficient cash, availability of cash. Why? Because cash is lifeblood of any company. So without cash, it is impossible to survive. Okay, any organization or anybody. So any, even a human body. So you are unable to survive without cash. So the cash is lifeblood of a company. So why is cash necessary? Cash, it is necessary to having enough cash to, for example, paying your supplier, paying wages of your staff. Okay, so it is necessary to have a sufficient cash. So this is a responsibility for for a finance officer, and that's why the finance officer, they are part of the success of any organization. So you have to ensure you have a sufficient cash. Okay, so without cash, it is impossible to survive. Okay, so availability of cash. So um, uh, when it is coming for the accounting software Sage, so we will for example, one of the responsibility and of the finance. So for example, one of the tasks is ask you for the credit term. So if you making sales to your customer and on credit, so the credit note, whether it's going to be 10 days or 30 days. Okay, so the purpose of 30 days or 10 days, so obviously to ensure you will getting back cash on time, and this is allow you to manage of your cash and to ensure you have a sufficient cash at bank. Okay, so there are a number of ways you can managing or improving solvency to controlling your cash. For example, the regular reconciliation of bank balance. So the purpose of this point, obviously, so um, on a monthly basis or even on the weekly basis, so you have to ensure how much money it is in your bank account and what is you expecting to pay in um, in next weeks or next month. So you have to look at the control between what is available and what you expecting to pay in the future. So this is one of the way to managing your cash, which we're calling a regular reconciliation of the bank balance. The second point is you have to be aware of the bank balance, and again, always you have to look at your bank balance, how much money is in the bank, and for example, how much money you expecting coming in and going out. Okay, so um, to ensure, obviously, you are in control of your cash and bank account. The third way, obviously, you have to be aware how much you owe to your supplier. So you have to look at your credit level, and for example, you already learned about your trade receivable and trade payable. Receivable, what you expecting coming in, and payable what you expect to pay with the time. So it is necessary to understand how much money you owe. So as an organization, you have to always make sure your current asset is greater than current liability. Okay, this is one tipping point. Always you have to ensure your current asset are greater than your current liability. So by to do that, so obviously it allows you to controlling your cash. Okay, to controlling your cash and having sufficient cash. However, if your current liability is greater than your current asset, so it means you are in big trouble. Okay, so you are in the situation of going to administration. Okay, however, there is other ways to improving your solvency. You have to be aware, and you have to have a good understanding of planning and identifying whether the need arrange for increasing or extending the credit or loan facility. So for example, currently during this pandemic problems, so during this COVID-19, so many companies it went having a problem with the cash, so they don't have enough cash, obviously, because they cannot have any income while they have expenses. So in this situation, you have to make a planning to extending or to negotiate with, for example, loan facility with your bank, negotiating with your supplier to extending a credit limited. Okay, credit limit. Okay, so this is a necessary to have a planning. Okay, when if you have a shortage of cash, so you have to a plan in in accurate way to ensure you are going to um, extending your credit term with your supplier. Okay, so number 4 is about the policy and procedure with finance functioning. Okay, um, this is by law, as a finance team, or is they are responsible for a number of they have a number of the obligation. One of the obligation, for example, VAT return. So I'm submitting a VAT on time. Okay. So VAT is value additional tax. So as a company, if you're charging your customer for the VAT, and if you are registered for the VAT, so obviously you have to every quarter you must return the VAT to the tax authority, to the HMRC, and submitting your VAT return on time, because obviously if you are unable to submitting the VAT on time, so you will receiving a penalty. Okay, you will receiving um, a penalty for missing out the deadline of submitting your VAT. Okay, so this is a legal requirement in terms of the internal policy and the procedure. So for example, overtime. Okay, if you are in the working in the organization, so you have overtime payment. So how are they authorized and accounted for? Who's going to authorizing the overtime payment? Okay, who's going to authorizing overtime payment? And the legal requirement, for example, corporation tax. So obviously VAT and corporation tax is two separate requirements. So both of them is go to the tax authority, but one of them is VAT charging from a customer, and just you pass it to the. However, corporation tax is taxable based on the profit you're making. So if you're making a profit, you have to pay corporation tax. Then the corporation taxes go to the revenue again. So the corporation tax probably submitted annually, but VAT is submitted every quarter, every 3 months. Okay, so and the third one is health and safety. Health and safety in any organization, it is necessary, and it is by law company is required to have a health and safety in place. And this is to protecting employees and to protecting customer and visitor to the building of the businesses. Okay, so cost of recording keeping need to be justified. So for example, any cost relating to maintenance of the premises of the business, so it need to be justified. Okay, it need to be justified, and this information must be recorded. Okay, another policy and procedure which is required within the finance function is data protections requirement. So data protection is a requirement. For example, the information of your supplier, information of your customer. For example, the bank details of your customer. So it is your responsibility to protecting information from supplier and customer and employees. So you must have protected software to protecting the information and sensitive information relating to customer, supplier, and employees. So by law, data protection is required. Okay. The last one is accounting requirement. This is a requirement. This is legally requirement for limited companies. For example, submitting a financial accounting to company's house, and the company's house, they are publicly available document. Whose company's house? The company's house, they can publish your information to ensure actually do not misleading the public and misleading your investor and shareholder in the company. Okay, so in terms of the internal policy, so authorized signature is required for publishing financial accounting. So authorized signature is probably chief executive of the company, or a chairperson of a company, or a finance officer, chief finance officer. So they can sign the information, and they are valid. The information is valid. Okay. So in terms of the information received from stakeholders, so who is a stakeholder of the company? So a stakeholder of the company probably is going to be government, community, employees, supplier, creditor, and manager. So these are a different group of stakeholder in the company. Okay, these are different group of stakeholder in the company. So all these stakeholders probably they have an interest in your organizations, and they need to see these kind of information. For example, statement of the financial position, statement of the profit and loss. So they need to see how the what's the planning of the organization, what is the for example, how much the company own and how much they owe. Okay, so creditor, for example, is this creditor is a control is a require invoices. So this kind of the information, it is a really necessary type of information, for example, for the credit note, for the payroll information. So each of them, they are dealing with different issues. Okay, so yeah, some of this information is received from the external sources such as the sales or the bank statements and the purchase invoices, and some of them is actually is from the internal. Okay, from the internal. So you can control, for example, the payroll department, sales department, warehouse. So these are all internal. Okay. Okay, that's all this chapter, and the summary of the chapter, obviously. So you have to be aware typical work responsibility and accountability. For example, recording transactions. So when you're receiving the invoices, you have to record it in the appropriate ledger, uh, whether it is a sale or purchase, receivable or payable, or petty cash. So you have to record a transaction in appropriate ledger. Okay, preparing summaries and reconciliations. So every month you must reconcile your bank statement with what you recorded. Okay, with what you recorded. If there is any differences between your bank statements and what you have, what you recorded, then you have to adjust it appropriately. So analyzing and preparing of the report. So obviously it is necessary to analyzing your statements, for example, statement of the profit and loss. So if your sales is actually decreasing or declining compared to last year, so you have to investigate it and what's the reason. For example, if your expenses are increasing, so you have to investigate what is the reason, what is causing for increasing your expenses. So this is the way to analyzing and preparing a report. Okay, so for example, if your um, liability increasing, so you have to investigate what is the reason why you are unable to um, pay back uh, your your liability. So this is the reason, or you have to investigate. Okay, in terms of the financial management, financial and management accounting, these are two different, but each of them is responsible for different issue. For example, financial accounting responsible for the external matter, and they are preparing accounting on annually. They are focused on the historical data. They are responsible for preparing financials um, statement, including statement of profit loss, statement of their financial position. However, management accounting is they are preparing a monthly report, including budgeting, including preparing and controlling and making strategic decision making. And also they are focused on the historical information, so they need the historical information. Okay, so in terms of improving or managing your cash, so you have to be aware of how much you owe and how much you expecting to coming in. You have to always watching your bank balance, and you have to ensure you are not going through overspending. Okay, this is the way to managing your cash. And obviously if you're thinking you have a problem of overspending, so you have to negotiate with your supplier, with your credit, to extend a credit limit. Okay, policy and procedure. For example, you are responsible for the VAT return, you are responsible for the health and safety in the organizations. So you are responsible for a data protection in relation to your supplier, customer, and employees, and you have to ensure you have uh, a good software in place to protecting a data. Okay. Okay, that's all from this chapter. Thank you.